banking. There are two aspects in which we can discuss the banking. First is your commercial bank, okay, and the other one is the central bank. So what are these two aspects that we are talking about? Commercial banks and the central bank. How do they differ? We will all discuss about it in the topics to come later on. But first and foremost, let me tell you that both of them, the commercial banks as well as the central bank, forms the part of the Indian banking system. When we try to explain it from our country's point of view, Indian banking system will consist of what? The commercial banks, like I will write COMM for the commercial, okay? Commercial banks. Example is like your State Bank of India. It is one of the public sector banks. In fact, one of the most reputed, okay? We have in your private sector bank, we have HDFC or ICICI, okay? Canara Bank, Allahabad Bank in the public sector bank, alright? Be it the public sector or the private sector, commercial banks have some functions which we will learn very shortly, okay? But before that, let me tell you a bit about central bank. What are central bank? Central banks is an apex bank. Okay, this apex bank which supervises, controls and takes care of all the banking system. Right, the Indian banking system will be taken care of and supervised by the apex bank, which is the monetary authority. Right, authority which takes care of the money supply in our economy. Okay, it is an authority, and this is RBI. The RBI or the Reserve Bank of India will be our central bank. So, like Reserve Bank of India is our central bank, Federal Reserve is the Central Bank of United States of America, Bank of England for the UK, etc., etc. Okay. Now, coming back, let us define what is commercial bank. Okay, commercial bank. First and foremost, commercial banks is an institution. What kind of institution? Which performs the functions. There are certain functions which a commercial bank will perform, and what are those? The function of accepting deposits, okay, accepting deposits, granting loans, and making investments, and making investments. So when you look carefully at this definition of commercial banking, you will get to know that commercial banks perform the functions of accepting deposits, all right, granting of loans, and also making investments. So breaking this definition further down, we come across the concept of deposit. All right, let's first and foremost understand what deposits are. Deposits could be of two forms. First is your primary deposit. Primary deposits. These are the deposits which are made by the public. All right, the people, they keep their deposit with the banks. and those kind of deposits are known as primary deposits. Okay, these are made by public, all right, and they will keep these deposits with the bank. And secondary deposits are those deposits which arise due to loan or credit creation. Oh, sorry about that. Which arise due to a loan or credit creation by commercial banks. Okay, we will look at it. Okay, so primary deposit are the cash deposits with the these primary deposits are basically the cash deposits with the commercial banks by the people. All right, and secondary deposits, they are the deposits which arise on account of the loan by the banks to the people. Now this concept of loan has come up. All right, it's there in the definition also. Why is loan necessary? Okay, uh, to understand that we have to come at this concept. This is bank. Okay, and bank is what? It is an institution, an intermediary. Okay, bank is first and foremost an institution or an intermediary which will be responsible for making the household and the investors need. Okay, these are the two parties, and bank stands in the middle. Okay, household and individuals, private individuals, they will have certain savings with themselves, and this savings they would like to invest it somewhere. Keeping the savings or the money idle, all right, it's not favorable, because these idle savings are not going to give them any income. They are not going to earn anything. All right, but then if these same savings could be mobilized to the people or the productive sector, investors in the productive sectors, okay, they can utilize this money in order to invest in something which will earn them profit or income. Okay, so bank acts as an intermediary. All right, bank will act as an intermediary which will borrow. The bank will borrow the savings or the money which the household have. Okay, and bank will then give away this money which has been received from the household, and it will lend out. All right, it will lend out to the people in need or to the investors. Okay, and it is for this reason that the rate at which, okay, the rate at which banks borrow money from a household or individuals, okay, will be called as a borrowing rate. Okay, borrowing rate, and the rate at which banks, by bank I mean the commercial bank, okay, not the central bank, the rate at which banks lend money to investors in the productive sector. All right, what do we call that? We call that lending rate. Lending rate. And it is this difference between the borrowing rate and lending rate, all right, which will give you your spread. And this spread is what we are interested in, because this is what your earning of the bank. Okay, this will give you an idea about how much the bank is earning, the spread. Okay, are you clear with it? Yes, let's move on. Now, coming to the functions of, let's come to the functions of commercial bank. There are primary functions of commercial bank, all right, also the secondary function of commercial bank. In the primary function, it mainly comprises of two very important functions, which is what? Accepting of deposits, right? First is your accepting of deposits, and the second one is advancing of loans. Okay, in the secondary functions we have first and foremost overdraft facilities. Next we have discounting bills of exchange. Okay, I will come to that bills of exchange, okay, later. And we have agency functions. Okay, also we have general utility functions. General utility functions. Okay, so these are secondary functions. Why so? Because they are just supplementary, and okay, they are the functions which the banks perform apart from the primary functions, which are more important. Okay, in the primary function we have accepting of deposits. We know that primary deposits as well as the secondary deposits are being created by the commercial banks. In the this accepting of deposits will be in the form of, firstly, your current account. Right, current account is the account which people hold with the commercial banks. It is also a demand deposit account. Okay, in current account, what actually happens is a businessman or an enterprise, right? They will open an account which will make them able to withdraw money without any limitation. Okay, without any limitation, they can withdraw money, and the banks will impose a service charge. There is no restriction on the withdrawal of money from such kind of account, because these are demand deposits. Okay, and the person who is holding the account has every right and the commercial banks are obliged to give them money whenever they demand. Okay, but it comes with a certain no restriction is there in the amount of, no restriction on withdrawal. Okay, but there will be some service charge. Okay, apart from that, uh, deposits could also be in the form of your fixed ones. Okay, fixed deposits or fixed or term, we call it term deposits. Now this kind of deposits are uh, they are non-checkable. We have seen earlier in the demand deposit that those the money in that account, whenever we need, whenever we want, through the use of checks, okay, through the use of checks we could withdraw. So these are checkable accounts, we will say. But in the fixed or a term deposit, these are non-checkable because we cannot at any time what to say demand the money which is there in the fixed deposit. Certain maturity period is involved, and until and unless that maturity period is over, we cannot withdraw money out of it. Okay, so such deposits do not enjoy checkable facility, and these deposits carry a high rate of interest. So non-checkable is one feature of this, and high rate of interest means if people are keeping their deposits with the bank as fixed deposit, all right, they are earning interest on those. Okay, so that is one thing. And the third kind of deposit is a savings deposit. Okay, this will be a combination of both the current account and also the fixed deposit. This savings deposit will no doubt be checkable, okay, like how we saw in the current account, but there is limit or there is restriction on, there will be restriction on withdrawal. Okay, unlike how we saw in the current account, savings account will carry some restrictions on the withdrawal. Okay, and also it earns a rate of interest if you are keeping money in your savings account, in your savings deposit. Rate of interest will be there, but it will be lesser, but lesser than that of current account. Okay, so when you look at it, deposits, both current and the savings, okay, both current and account, savings account deposits will be checkable, and hence demand deposits. All right, they are demand deposits, but fixed or the term deposits are non-checkable and they are not demand deposits. Okay, but they have certain degree of moneyness to them, no doubt, because after the end of the maturity period, they also become liquid. Okay, now let's come to the secondary function. Secondary function, first and foremost, we have the overdraft facility. It is the facility which is given to certain members of the certain customers, I would like to say, in the banks, that they are allowed to overdraw. Okay, I'm using the word overdraw. That means if no money is there in his account, certain persons will be allowed to withdraw cash. Okay, this is some facility which is given, and this kind of facility is given by the commercial banks. Okay, uh, discounting bills of exchange. Now this bills of exchange is actually some kind of promissory note. All right, promissory note, some bill which is given. All right, and it has to be encashed within a certain time period. Like if trading has taken place, some business consignment has taken place, and the person decides to give bill of exchange instead of money in cash. All right, then that bill of exchange need not necessarily be exactly like money, but it has the power to withdraw uh, money from the bank, from the commercial bank. The commercial bank will discount that bill of exchange. Now, discounting the bill of exchange means converting this bill of exchange into cash form. Okay, cash form of money, and this will be done by the commercial banks, of course, after earning certain what is the commission. Okay, the bank will earn certain commission on this discounting of bill, and then it will be given to the person who is bearing the bill of exchange. Okay, so agency function. So first, after the discounting bill of exchange, we have agency function. Now agency function, uh, commercial banks nowadays, they act as agency. Agency as in what? A transfer of funds. Right. With the coming of this commercial banks, transfer of funds have become very easy. It has become economical, and also the easy remittances of funds from one place to another with the help of demand drafts. Okay, mail transfers, etc., has become a possibility. So uh, they what to say, perform the function of transfer of funds. Secondly, the collection of payments of various items. Nowadays, when you see all the payment of bill, be it your phone bill, be it your internet bill, be it your electricity bill, everything is done through what, your Google Pay, or through the internet banking, etc., which are all linked to an account in the commercial bank. Okay, so this commercial banks will give that kind of facilities as well, payment of bill, etc., and also the collection of what to say, fees, etc., can be done. Now purchase and sale of foreign exchange is another agency function. All right, and also the purchase and sale of securities like your stocks and shares of the private companies, as well as the government securities on behalf of the customers. Okay, and also the income tax consultancy is also done through the agency function of the commercial bank. We know what income tax is. It is a direct tax which is collected on our income, and we are obliged, we are legally bound to pay income tax. Now, uh, the agency function of commercial banking helps us in what way? The commercial banks is going to provide us with advice and consultancy, okay, regarding our income tax payments, all right, and the other related issues. Now, when we talk of the general utility function, we have the locker facility is given to us, all right, in the commercial banks. We have a traveler's check. Okay, to avoid any risk of taking cash during our journey to foreign trips or to our vacation, these traveler checks will be given to us, by which we can encash in the countries where we are going. Okay, now letter of credit, this is something related to certificate of credit worthiness. Okay, that is also given. Underwriting securities, commercial banks will undertake the task of underwriting. Okay, securities, as public has full faith in the credit worthiness of banks, public do not hesitate in buying the securities underwritten by banks. Okay, and also the collection of statistics. Banks collect and publish statistics relating to trade, commerce, and industry. All right, and hence they advise customers on financial matters. So we have studied the function of commercial banks. They are broadly classified into primary and secondary. Right, primary consisting of accepting of deposits and advancing of loans. Okay, This is a more important function of commercial banks. And secondly, in the secondary functions, we have seen various other miscellaneous functions of the commercial bank. Okay, so that is some initial understanding of our banking system. All right, we will continue further with the ways in which credit or money is created in our economy, and also the functions of central bank, the role of central bank, RBI, and the various quantitative and qualitative measures they take in order to control the supply of money in our economy. Thank you very much.